Hi, this is Dan Collins coming to you live from the Las Vegas Traders Expo, and with me is Tyrone Jackson, founder of The Wealthy Investor.
Thank you. Pleasure to be here.
Good to have you, Tyrone. It's you teach investing strategies to retail traders. You have a unique approach. Why don't you tell us about your strategy?
Perfect. What I do is I teach people how to sell covered calls against stocks that you own. To lower the risk, most of the stocks that we own are in the S&P 500, strong earnings growth, or the Dow Jones Industrial Average. So if you're selling these call options and you're taking in money, you're also getting dividends and building wealth at the same time.
Okay, so that's a common but important risk management strategy, isn't it?
Absolutely. What I find here, and I love being here at the Traders Expo, but sometimes people go stock trading crazy, right? They want the most elaborate strategies with all these charts instead of doing the simple thing that could actually earn them $1,000 a week, $2,500 a week in less time and less money in commission.
Yeah, and we talked to a lot of options experts here, and what came through is the beauty of options is you can build on what you've learned in there, and you can arrange a strategy specific to what you're trying to do. But each one is complicated, and you really need to take one step at a time.
Correct. The only difference is covered calls. Usually a simple covered call trade will take about 3 minutes. And that covered call trade is guaranteed income, once again, anywhere from $300 to thousands of dollars per week. You decide based on the size of your account.
Well, this is a perfect time to come have you speak with us because we had a little bit of a market event yesterday.
Yes,
we had a little bit of a market event with the stock indexes. Dow lost more than 600 points. This is a type of event that your strategy is meant to protect people from.
Yes.
Explain how your clients were helped by this strategy on a day like yesterday.
Okay, perfect example. There are two different types of covered calls, which most people know. There are in-the-money covered calls and out-of-the-money covered calls. Anytime you think your favorite Dow or S&P component could actually pull back because of something that's going on externally, you want to sell an in-the-money call. However, if you think the stock could potentially rise and you don't mind trading it for a profit, you would sell an out-of-the-money covered call. Now, here's the beauty. None of us really know where our favorite stock is going in the next 72 hours. Therefore, if I want tradable income, I would sell an in-the-money and out-of-the-money covered call at the same time, preferably during a dividend collection period, and I win three ways.
Okay, and I think one of the benefits of this is that you have your positions in your equities.
Correct.
That may be a long position that you want to keep for a long period of time, but you want protection in case of an event like this. This is something that allows you to have protection from the downside, but maintain your opportunity.
That is correct, and it allows you to generate income. So, for example, when I go on vacation, I get my budget for vacation from the stock market. I plan the trades to make the money that I need for the vacation, $5,000, $10,000 if I want to stay at the Four Seasons, for example. Most of my lifestyle is financed by covered calls, and I still own certain stocks for asset building purposes. It's really a shift in mindset, but boy, when you get it, you're going to make great things happen.
Okay, Tyrone, well, it's great having you here. We're going to take a little break right now, but we're going to return. Tyrone's going to talk a little bit more in depth about his strategies live from the Las Vegas Traders Expo.